And we have actually a wonderful panel. We have folks on various different sides of blockchain, so we should be able to explore various different aspects of blockchain from the VC side, from a startup, from an established player. So it should be fun. But what I wanted to do first was, not knowing what is the background of each one of you, we put together a very small presentation, just a short presentation to give you some background about blockchain. If you already know about blockchain, catch a nap for 5 minutes. And if you don't, maybe it would be a little bit instructional. But before I start, I have a question. How many people had heard about blockchain, of course, before you registered for this event? Okay, let's keep the hands up. Let's say about 40%. Okay, second question. How many have heard about that 6 months ago? Wow, this is good. How about a year ago? So you guys know everything about blockchain. So I am going to cancel my presentation and march right into the panel. How's that sound? Okay. No, this is good. This means that you guys have been following, the progress of blockchain. So as Vijay just pointed out, said that, our company is in data center and they have nothing to do with blockchain. Anybody comes up and says to me that we have nothing to do with blockchain, all I say is, now, very soon you will have something to do with blockchain. So that is my tagline with the blockchain. So let's start. So the idea was that just let's give you a very highest possible, simplest view of blockchain, right? So what is that highest view possible? So I think the highest view possible, without getting into any technical details, because I thought the folks are going to be in various different backgrounds, is that you have a sort of a data structure which has a very interesting property. And the property is that you can maintain a chain of events in such a way that the chain of events will be immutable, in the sense that in order to you not have the capability to modify anything in the chain, because the chain sort of records itself, right? And you link them together. So blockchain is a public, chronological, immutable, cryptographic ledger. What does that mean? So most people got introduced to blockchain because of Bitcoin, but blockchain in some sense has really nothing to do with Bitcoin. It's an independent structure. It can be viewed as an independent structure, right? So if you think about, you have a chain of events, chain of transactions, chain of deals, anything like that, so you could keep that chain of events. So it's some kind of a time series event that is happening, so you can use the blockchain for doing that, right? In the time series itself, whatever the events are happening, whatever transactions happening, we also somehow timestamp them. So you can have a sense of what happened at what time in a sequential order. It also does something with digital signatures, so that it would be very difficult to hack into something or modify something and things like that. So that it has that cryptographic nature as well. So when we talk about blockchain, you will repeatedly hear from everybody that these are some of the features of blockchain. It's immutable, meaning once it has been written down, you don't have the ability to modify that, at least in theory. Distributed, many people have copies of this data structure, so that it's sort of not easy to modify that, because there's not one copy, there's many, many copies. It's decentralized, obviously. It's scalable. It has been demonstrated. And you can verify whatever is in the blockchain independently. You don't have to have an auditor and things like that. So think about that. So if you have features like that, this is not a set of features that you can tell me that, oh, I have another data structure, I have another database which has all these features. So this is what is interesting about blockchain. It has these 5, 6 very unique features. Because of these unique features, it can be used to do a lot of things, right? So, but before that, the reason why you are here, and you said that you heard about the blockchain about a year ago. So I asked my marketing team to basically take the list of all the marketing events that has happened. So this is actually all the marketing. It doesn't say how important that event is. It's just a count of events. So if you see that, what has happened, we had a spike about, this is word blockchain being used in some press release or some event like that. So you can see that there's a spike in January and in July of 2004, but nothing like what is happening today. So in the last 6 months or last 3 months, the news about blockchain is sort of, I won't say exponential, but it is certainly getting there. So it is really picking up the hype. It is truly a phenomena. I won't call it a data structure. I won't call it a database. Nobody uses these words to describe blockchain. The reason is because it is a phenomena, because it impacts so many industries. So I want to take a few examples, and then in our panel, I'm sure we'll take many more examples. What is the potential impact of this technology? So first of all, what is the underlying structure in a real estate, insurance, banking, government, or healthcare? And actually, there are about 15, 16 more industries that can be impacted by blockchain potentially. I think the key thing in each of them is that many people are trying to work together, and they are trying to build trust, and they want to do that in a fashion that they don't want to have a trusted party, right? This is an underlying problem that needs to be solved in many, many industries. So I want to give you some examples of each one of them. So let's talk about real estate. In a real estate, if you think about that, and I put up some numbers, two important one is that mortgage fraud is around $1.5 billion. This is very understated number. The real numbers is much higher because that doesn't get reported, right? And anybody who has done a mortgage for their home, you know it takes about 30 to 60 days. In today's electronic world, in Silicon Valley, if you want to buy a house, it takes you that many days. Isn't that amazing that it takes us this many days, right? So imagine if you could do actually, what would be the impact to real estate industry if you could actually buy a house or buy an apartment or buy a property in a few seconds? How would that industry change? Would it triple, double? Would it become 10x, 100x? All kind of estimates exist that if you could actually bring down it from T plus 30 or T plus 60 where it is right now to an instantaneous, the world couldn't change. In real estate, there are other problems in other parts of the world, which is not true in our country. In parts like India, parts like Africa, people could get killed over real estate transactions. Why? Because the property itself is disputed. Now, thinking about India has done something quite remarkable in the last 10 years, is that they have actually digitized the entire India, which is very truly remarkable for a third world country. But this is not true for the rest of the world. So if you think about that, what is your ability today to buy a plot in India? Zero. Neither can you sell something in Australia today. Not possible. In fact, we don't even think about that as an option, right? Imagine a world where not only you can buy and sell property instantaneously, you can buy and sell property anywhere in the world. Because the trusted party is not the Australian government, the trusted party is not the Indian government, trusted party is somebody else, right? So it will truly create a different kind of a real estate market, right? Also imagine, how would that change the life of an Indian farmer? What is the difference between the life of an Indian farmer and an American farmer? Ability of an American farmer to raise loan against its property. Why? Because there's capital here which backs that, right? But there's no such capital in India. Now let's say international investors are willing to back that land property in India. Those Indian farmers or a third world country farmer has ability to raise loans. That can change the shape of many third world countries because the asset is real. Land is real. Title is real. Land is no different than in the United States, right? So this is the impact that you're thinking about. Same thing for insurance, right? Insurance is a gigantic industry. But again, insurance is a phenomena that happens in the first world countries. It doesn't happen in third world countries. Why doesn't it not happen in third world countries? Why only the insurance benefit? I mean, certainly we all have insurance of all kinds, and we think there is some benefit to it. That's why we have the insurance. But as you have noticed that the reason we have that because we have a clear title to things here in this country. We have a clear title to a car. There's a clear title. So there is issue about the trust that exists in this country and other Western democracies that does not exist. So if the same trust can be created in other countries, it will again democratize insurance and it's going to change the life of many people around the world. In third world countries today, if there's a fire in your house, you're destroyed. Your family is destroyed. Your future is destroyed. Why? Because you don't have fire insurance. You can't have fire insurance because you don't have a clear title to your property, right? And because foreign underwriters are not willing to go into third world countries. I'm taking a third world perspective in this particular talk because I think it's more interesting. There's hundreds of applications in first world countries as well. Let's think about banking and exchanges. This is something that I've been working on for the last 3 years, and I know a word or two about this particular industry. In working in this industry for the last few years, I've found out that banking industry and financial institutions have very significant, serious challenges. And they have come about mainly because if you look at the banking industry, it is a patchwork of IT infrastructure that has been set, IT side and the software side has been put together over the last 20, 30, 40 years. And now they have all kind of regulatory compliance issues. Then they ask them questions about, can you give me this answer? Well, this answer is not possible to give from this system or that system or this system. It might require them to go across many systems, and even the data may not be stored in a fashion that they can give you answers like that. And as a result, you see a major regulatory compliance issues that are happening with the banks. They're paying fines and things like that. If you look at the IT infrastructure in banks, it's huge numbers. I mean, we know banks where the audit and compliance teams is 25,000 people. These are unimaginable numbers. I work with a team, they have 8,000 people in their audit and compliance team, 8,000 people in a large bank. I work with another team, they have 7,600 people in audit and compliance. These are large numbers. This is not the numbers that in Silicon Valley we appreciate. In government, many applications, I had a great opportunity to talk to a few of the government agencies. Let's think of a very interesting application. One application is that as the government agencies process documents, right? How do these documents actually move across the government? When the status of the document changes from being a normal document to classified to secret to top secret, if you are any fans of Senator Hillary Clinton here, the very core of the questions that she's being asked is about the status of the documents as it moved through the system in those 13 hours in Benghazi when the Benghazi event happened, right? How do you actually find out what was the status of those documents, right? How did they actually change? And how? So this is all problems that if they were documented on some data structure where you easily find out, it will make it better. Many such problems exist in how government processes documents. A lot of also efficiencies you can have in government because they have to process lots amount of data, keep a lot of lineage of a large number of citizens all over the world, things like that. Many applications in that area. Lastly, in healthcare. Again, we had an opportunity to talk to some of the largest healthcare companies in the world. It has been told to me that a drug can take anywhere from 12 years to move through the system. During that time, they may have hundreds of thousands of tests. And somebody told me that 86% of drug tests that finally make it to FDA are actually modified one way or the other. They didn't use the word tempered, but that's what they meant, that they are modified one way or the other. So as a result, when FDA is actually looking for certification of a molecule, they have these hundreds and thousands of documents, and they have to spend a significant amount of time of verifying and validating those documents, right? So again, comes back to something like that. So as you can see, I'm just giving you little snippets, and we'll get more from our panel. It has hundreds and hundreds of applications wherever you have multiple parties to work together, you have trust issues and things of that nature. So I'll stop here. We have a great panel, and I will actually introduce the panel after David has a chance to make some comments. We'll let him make the presentation, then I will introduce the panel, and we'll ask each panel members about their position statement on blockchain, its applications from their perspective, and then we'll get into questions. All right? Thank you so much.
Thanks, Naveed. David Aho. I am co-founder and investor in Chronicled. That's me on the bottom right. Had a lot more hair back then. So Chronicled was originally founded by Ryan Orr and myself in mid-2014. Ryan and I met earlier in 2014. Some mutual friends at Ripple Labs introduced us. And at the time, he was investing and advising multiple blockchain startups, and I was looking at a number of opportunities. Ryan and I, we had come to a very similar investment thesis at approximately the same time. And I think it was because we're both from highly regulated backgrounds. Ryan had previously founded a platform to intermediate ultra high-end infrastructure projects and institutional investors. And my day job is in private equity. So I think that's why we both came to the same thesis at the same time, which was that blockchains are an ideal place to be registering and taking custody of assets in the future, but it was going to be the unregulated markets that first get traction. Specifically, Ryan and I joined together and co-founded Chronicled, which is building and developing a blockchain-based registry for luxury goods and collectibles. Our thesis was that blockchains have these ideal characteristics for registering assets, especially if you're a startup trying to start a new registry. You can design a blockchain-based registry so that it outlives the life of any company. You can hardwire rules of engagement up front. You can ensure to constituents that their private and their business-critical data will remain theirs. They can control it. They can keep dominion over it. And also, critically, for a startup, the public and open nature of a blockchain, we believe, reduces incentives for the establishment of competing registries down the line. This point was very important to us because a lot of the foundational problems that we intend to solve are really only addressed once the registry hits critical mass. So once you do have a global registry in luxury goods and collectibles, these massive foundational problems can be addressed. These problems are so big that most people don't even notice them. For instance, absolutely nearly perfect counterfeits have pervaded these markets. Everyday sellers don't even think about selling secondhand luxury goods, high-value secondhand luxury goods on the internet. Because a seller, if they don't have multi-year reputation, there's no way they're going to get a fair price. And a buyer, if they're actually looking for an authentic good, would have to be kind of nuts to go on to a peer-to-peer marketplace, buy some high-value luxury good from some entity without reputation. Also, the buyers and sellers that do decide to transact face these very high listing and search frictions. Many of you may know about this if you've tried to sell goods online, but you have to remember the name of it, you have to remember the price, you have to type in these long descriptions, take a bunch of pictures. And if you're a buyer, on the flip side, you have to search these peer-to-peer marketplaces filled with tons of unstructured data. Poor descriptions, awful pictures. We believe these issues are drastically constraining the size of the luxury goods secondhand markets today. And brands have really big problems too. They spend a few $100 million designing and marketing the new Yeezys, and then a few months later, there's millions of kids walking around with fakes on. It defeats the purpose. And also, traditional brands are getting their lunch eaten by new disruptive direct-to-consumer brands that have a direct channel of engagement with every single one of their customers. But the issue that Ryan and I realized pretty early on was, these problems, they're solved once the registry exists. Once you have these two-sided network effects. The registry, it's not going to be super useful to a brand unless the consumers know about it and are using it. And on the flip side, it's not going to be super useful to a user unless there's a number of brands on it. You don't want to interact with 20 different registries. You're never going to do it. But that's tricky because according to Bain, the markets that we're looking to attack are sized at $1.1 trillion. That's luxury goods, fine art, jewelry. So we had to figure out how do we do this as a startup? How do we get into markets this big? And what we knew the answer was that we had to find our niche, a manageably sized niche of hyper-connected users with an acute pain point. Everybody knows Amazon started in books. Legend says that eBay started with Pez dispensers. We needed to find our niche. So we spent the second half of 2014, met some of these guys at that time and asked for their input. And the original thesis was art. But then we looked at fine wine, luxury handbags, jewelry, firearms, sports memorabilia, watches, all these different verticals with super high fraud issues and lots of friction. But none of them were quite right. You know, the markets were too stodgy, the participants were too staid, and most of them turned over very slowly. But one day in late 2014, we got very lucky. So, you know, admittedly, some inspiration struck when one of us was walking down the street listening to some music, listening to the song 23 by Miley Cyrus. And the whole song is about collectible sneakers. J's on my feet, with my J's on. And we're thinking, you know, this is one vertical we haven't looked at all. We know that there's this sneakerhead phenomenon out there. We don't know much about it. Perhaps this is something that we should look into. And I kid you not, this is how we came about it. So we started looking into it, and luckily there's a website online, formerly called campless.com. It's like the Nate Silver of sneakers, and it had every single fact you could ever want to know about sneakers. So we were able to get up to speed very quickly. And it turns out it was nearly perfect. There's a $1 billion aftermarket for limited edition collectible sneakers. Yeah, it's crazy. There's not a basketball team in America without one or two guys with 50 to 100 sneakers in their closet. This guy's collection's worth $2 million. Every one of those sneakers on the right there retail for over $4,000. Campless.com has been rebranded StockX.com. You guys can see all the crazy stats for yourself if you'd like. But perhaps more importantly, sneakers turn over ridiculously quickly. So the same day they're up for sale in the primary market, they're for sale on eBay, Flight Club, Instagram. This means that that registry can add value day one. So whereas in art or handbags or watches, you might be waiting for months or years or decades for the registry to add any value, we could add a lot of value day one. This was exactly the kind of demo we were looking for all along. Young kids, hyper-connected. The growth in sneaker trading has actually tracked the growth in Instagram. These kids are interacting with each other on social all day long. You know, this is like the low-stakes activity. This is the kind of low-stakes activity everybody talks about when you want to launch a new product. And you know, perhaps the luckiest piece of it all is there's actually an established culture of tagging and authenticating sneakers in the aftermarket, which allows us to initially go to market completely over the top, direct to the end consumer without any brand buy-in or retailer buy-in. And it turns out the fraud is ridiculously massive. At this point, it's difficult to even transact on eBay. We ran the numbers. We didn't need to, but we ran the numbers, and established sellers with multi-year reputation on eBay are getting over 20% more on the exact same sneakers as new sellers on eBay. To give you a little bit of a picture of how bad the problem is, just a quick story on these sneakers. Down here on the left, those are real sneakers. Nike released them on Back to the Future Day. They actually self-lace. Pretty fancy technology for sneakers. Nobody had ever done it before. Within 2 weeks, counterfeit working sneakers were being advertised on Instagram. So we had found our niche, our manageably sized niche of hyper-connected users with an acute pain point. So fast forward, 1 year forward, where we are today, just a quick, brief update on Chronicled before I leave you. We've soft launched our consumer application, which allows someone to download our app, press one button, scan for Chronicled sneakers within the area, tap another button, drop it into their collection, tap another button, transfer it to a sneakerhead. The consumer app is seamlessly integrated with hardware that we have developed. They are PKI encrypted BLE and NFC hang tags, 3D printed in San Francisco with our partners. As I alluded to earlier, our very initial go-to-market is our over-the-top strategy. We hired away the 2 best authenticators in the world. They now are Chronicled employees, and they are going around New York City authenticating and tagging some of the highest value collections in the world, dropping them right into the consumer app. But at the same time, we're signing up business development deals with resellers, marketplaces, retailers, and brands. We're not competitive with anybody in the space. So by the end of the year, these BD deals should bring in tens of thousands of users into the consumer app really without an issue. Our first brand deal actually shipped in December. It was a collaboration between Greats brand, Marshawn Lynch's Beast Mode brand, he's holding it over there on the right, and Chronicled. We tagged 500 ultra limited edition sneakers with our PKI encrypted BLE hang tags that were registered to our Ethereum prototype. That's Chronicled. If any of you happen to be sneakerheads, we'd love to chat with you.
Let's do the second part of it. And what we like to do now is that I'm going to go to all our panel members and ask them to give us a sort of a couple of minutes or 2-3 minutes of their position statement. What do they think? Why do they think blockchain is an interesting technology? And it's not a commercial about your company. It's what makes you excited about it. And then pick 1 or 2 examples what you think is going to make this an exciting technology. Again, perhaps not related to your work, but whatever you think is most interesting. So first of all, I think let me ask Zaki Manian, who's the founder of Skuchain, to maybe start with a quick introduction to himself and then talk about his position statement on blockchain.
Hello, I'm Zaki. I'm a founder of Skuchain. Skuchain builds B2B trade finance solutions for blockchain technologies. I've been involved in this space for about 3 years, and I basically once I started thinking about this stuff, I couldn't stop. So I started a company because of that, as an excuse to just keep thinking about it. The thing that's most exciting about blockchain technology is that we get to really, for the first time, solve a class of problems that exist in society for which computer scientists have never been able to offer a compelling solution. And we haven't been able to offer a compelling solution because whatever solution a computer scientist brings to the table has to work with the existing social, cultural structures that exist. And we, as a culture, as the human race, have been really bad at building trusted intermediaries. When we build trusted systems, they're immediately captured and subverted by somebody. And the kinds of problems that we can solve with cryptography, applied crypto technology, blockchain technology, are a class of problems that I think this came up as a theme in the talk earlier, that there wasn't even a concept of solving them with computers. Because the cost of solving them from computers required you to find some party that would run the database and then not be corrupted. So when you look at what Skuchain focuses on invoices, contracts of sale, we're talking about the entire glue of the global economy. If we put all of that in one database, that database wouldn't be uncorrupted in a day because there would be unbounded amounts of wealth that could be gained by getting access to that database. And the only opportunity that exists is the kinds of stuff that we're building now. And so that's kind of why I'm interested in cryptocurrencies. I'm interested in almost every aspect of applied cryptography to human society and human welfare. But blockchain is a really special place to be working and be trying to build this information. I think it's a really worthy way of living your life. And
would you like to name one interesting application that you think that can be driven from blockchain, other than perhaps what you're working on, that can truly change the world? So I think the story of blockchain
is going to be, first, we're going to go where the money is. Because this is a nascent technology that is going to need a lot of resources and care to grow up. Its first applications are going to be in the financial rails. And probably not in solving developing world stuff. It's going to be, moving stocks around and bonds and securities and in allowing financing to happening. Probably the most rewarding stuff that could potentially happen in blockchain is medical records, land registries, all that stuff. But I think it's a two-phase process. Blockchain is going to grow up, taking fractions of a percentage point off of trillion-dollar industries, and is then going to mature into something that becomes something that more of sort of the basic functions of human society can rely on.
Okay, good. So let's pick one of the items you said, land registry, right? So do you think that if you can apply blockchain to land registry, what potential outcome can happen? I mean, what is the great thing that can happen to land registry if you use blockchain? I mean, if you were to take that example.
So again, I don't see any practical way of achieving this as a startup company in the immediate future. But imagine that a mature blockchain stack exists, that it's widely used by industries all over the world. So we're talking about 5 to 10 years into the future. In that world, you might want to have nations could immediately opt in all of their existing records into a blockchain. You would have an established cryptographic infrastructure that would have come from the other use cases of a blockchain that could be imported and used for people to, on their mobile phones, attest what property they own, get credit against those properties, transfer that property, all using a safe, secure infrastructure that is essentially massively reduces all of the venues for corruption.
I don't know if people in this room, I've bought and sold many houses in my life. My ex-wife and I, somehow or another, that was the thing of ours. But title insurance is one of my largest pet peeves in life. These people are zero value add. You walk into a very fancy space. They have all these people with notaries and stacks of papers and tons of stamps and stuff, and they absolutely don't do anything. I know exactly. I bought it from this guy that worked at a PE firm, and I actually know the guy who grew it there. I went to kids with our kids are friends, and you could actually see the title of some of these homes. And before that, it was a piece of land. There aren't some unencumbered liens on it and some crazy stuff where this title insurance comes from. It's a total bogus part. It's a tax on our society. It's a tax on real estate, and they eat into anyone that ever buys a house. It is absolutely unnecessary, but it's mandated if you're going to get a mortgage that they have mortgagors because they don't want to have the liability that maybe you don't own that piece of property entirely. So to your point, you go put this entire title, you can see the clear provenance of who owns this piece of property, and I know exactly that I bought 100% of this land off someone and there are no liens attached to it. They would show up on the blockchain and come through in my search. I bought this house outright, don't need the title insurance, and that entire industry could get wiped clean and I would love it.
Amen to that. Our next panelist is John Wolpert. He's a global blockchain offering director at IBM. He is a very pioneering character. He has started many businesses. Actually, I met the current CEO of Flywheel, a business that John started a few years ago. He has been with Watson ecosystem as well. So, John, coming to you, obviously you're leading a very important project in IBM related to blockchain. But what would be your position about blockchain, and how do you see that changing the world of commerce?
Well, I should say that in my spare time, I certify mortgages, but sorry. I'm going to start my spiel by asking a question. Who here is at SRI? Who works here? So I was here a few years ago, and I remember I was coming to see Steve, and I looked at a plaque, and it showed the first internet transmission from here, right?
That's correct.
I was
Received, right?
Received. You received it, and I was trying to look up the date because I couldn't remember what it was, but I couldn't get a signal. So isn't it interesting? We're sitting in this room, and we're talking about this thing, this blockchain. And I have to think that there were a bunch of people sitting in this room a few decades ago at the beginning of the internet. And it seems like the same thing to me. Now, I was a little younger, I'm, 50 now, so I wasn't really part of that revolution at the very beginning of it. I was a recipient of it. But I was around for the Java revolution, and I was around for the Linux thing and the XML thing. And at IBM, there's lots of parts of IBM, and I've always been in the fun part where we get to do open source work and we get to help evolve the internet. That's what we do. We step up. We step up. I remember in Java, it wasn't even our technology. We got behind it. We put thousands of people against Java, because it needed to happen. We knew that paradigm that pattern was important to proceed. All of us raised the boats. Here we are with blockchain, and we thought a couple of years ago, we said, it looks like another one of those. We got to get on it. We got to get behind it. We didn't invent it, but that really isn't we don't have a problem with that. Anybody who thinks that IBM does is not a good student of history of IBM. And so we got into Bitcoin, and then we got into, we thought, is Bitcoin the next Java? Is Bitcoin the next internet? Is Ethereum the next thing? We liked Ripple. We liked all of it. We just loved it. We just got into it. We just ripped into all this stuff. And at some point we said, this is pretty good. But unlike in the past, we thought, okay, we need to synthesize this stuff and then get behind it as an industry, because a little bit even more intensely than the internet itself or layer 7 web technology. This stuff is highly networked. This is deeply networked stuff. And it's much more high stakes. It's not about emails and packets. It's about your life. It's about your money. It's about your land title. It's valuable stuff, and you've got to do it right. It has to have security baked in from the beginning. It has to be in its DNA, because as any security expert will know, that's the only way you do security. So this isn't something that you just kind of do on a whim. You have to do it right, and you have to do it with the best minds in the industry together from the beginning, with this much code to start, right? Not this much and not this much, but this much. So we wrote this much, and we called it OBC, Open Blockchain, and we donated it almost immediately to the Linux Foundation. And the Linux Foundation had been, I'm sure anybody not know who the Linux Foundation is? Jim Zemlin and Mike Dolan, the guys at the Linux Foundation, said, we've been approached by just about everybody who has some kind of open source blockchain technology to flog. And this is the first time anybody came to us and said they don't want to be the control point at the center of it, that they wanted to give it away from the beginning. And they said, okay, we're going to get behind this thing if you can bring heaps of other companies with you with their own technologies, and we're going to do the hard thing of, I won't call it open source, I'm going to call it open innovation, right? So we said, look, we don't want to control it. This is our submission. Here's Intel's submission. Here's DAH's submission. Here's Blockstream's submission. Here's Ethereum's submission. Here's Ripple's submission. Intel's, all these other companies, JPMC, banks have become technology companies. They're employing huge numbers of really smart people, computer scientists. And they all have a contribution to make. And so we opened it up. And now, right now, the Hyperledger Foundation, they called it Hyperledger. They decided to take that name. And the Hyperledger Foundation is right now at work. By the way, the largest by volume open source foundation in history of open source, which is a little crazy. When we announced it on December 17th, we had 17 members. The second largest open source foundation in history got 450 requests by companies to join. We got 2,300 in a day.
Wow.
So by that number alone, it's the largest, and it's already becoming the largest by other metrics. But it's the risky thing. Are we going to make blockchain salad out of this? We have all these different things, and it's not like Docker or something or Linux where you come with a piece of code and you say, this is what it, and you start doing pull requests on it. No, we said, no, we're going to work together to come up with the basics. And if we do it right, you could build a Bitcoin or an Ethereum or a Ripple on top of it and save yourself a lot of time. And sorry, Bitcoin, Ripple, and Ethereum, that you had to build it before that existed. Right? So that's the job that we're about right now. And very soon, another month or two, you'll be able to write you'll be able to start doing pull requests of your own and help create the layer, we call it layer 8, the layer 7 of the transaction web. And that's what we're doing.
And if you have to name one favorite application of blockchain, not related to perhaps your work, if
My
you have an
favorite
ideal time in your life, what would you go build?
I'm going to dodge that question because I love these stories. An investor, I've been a startup guy 2 or 3 times, and I've been a big company guy and a government guy. And an investor told me something I wish they'd told me 10 years before they told me this. They said, we're interested in people who are passionate about a problem, not their solution to it. And that's what I heard from you, which I thought was really cool, right? You know, and you got passionate about a problem. So it was like a study in discovering passion, right? But you didn't say a thing about blockchain. You didn't say a thing about technology. You said a thing about a problem and opportunity. I really like that. So I think that blockchain is really good for that. And then I will say one thing. Ironically, the technology that was employed to avoid regulation is going to be a regulator's dream. So I will take issue to one thing you said, that you know, regulated industries are going to be the laggards on this. Yep. I think you might be wrong, which isn't going to be a problem for you. But I think you're wrong, because what I'm seeing is at the enterprise level, at the government level, at every level, people are jumping in hard and not fooling around. I mean, you know, you're right. They've read their Christensen, and they're working hard on it. They may win, they may lose, they may succeed, they may fail.
By the way, that was in mid-2014 when we had that thesis, and everything at the time was really mostly Bitcoin, crypto, and I think most people in the space are shocked at how fast it's moved.
Yep. So I'd say that's the. I'd like to not ever have to prepare taxes again. I'd like every government regulation rule to be instrumented on the blockchain, starting with, it wouldn't have been nice during Dodd-Frank if we had been able to do that. You know, how cool would it be if I could just run a transaction, I pay you for something, and I just put hashtag taxes in my chain code. And it just covers, it just deals with that. That's a little crazy. I mean, that's a little far out there. But
well, I would answer it
far off.
I would agree with that, depending upon
close.
which presidential nominee gets to the final race. Because some crazy guys out there, I would like to write my own taxes.
okay,
Okay, so our last
Trump coin, are we? I don't want that.
we're going to start that soon. So our last guest is Brad Stevens. He is the co-founder and managing partner of Blockchain Capital. I know Brad for some time now because he was the first believer in my company, PeerNova. He was one of the first investors in our company. He was, I would say, among the people who believed in Bitcoin and blockchain. Both of him and his brothers were out there first when people were just beginning to understand what these things are. So they have been there from the very beginning, very thankful to him for all his help and support all these years. So Brad, the question to you is that from, first of all, give us your perspective, and I know you're very passionate about blockchain, but also from your perspective, what do you see as some of the leading applications or some of the disruptive, you just mentioned title, insurance, and title. Is there any other things that might interest the audience after your position statement?
Sure. Thank you. So I'm Brad Stevens, one of the co-founders. There's 3 of us of Blockchain Capital. We originally started about 3.5 years ago as cryptocurrency partners, and we were obsessed with Bitcoin and what it could do to the world. And like many people in the space, you kind of get enthralled with this digital currency, digital gold, and it kind of consumed us, and we all quit what we were doing and started looking at the space and realized there were no wallets, there were no ways to use this currency. There was a lot of just huge holes in this ecosystem if it was going to be a global currency, and so we started just funding companies with entrepreneurs that also were excited and started a portfolio sort of accidentally of kind of filling the holes in the blockchain, the Bitcoin ecosystem, really, at that point. about a year-ish later, we kind of had that aha that I think a lot of people in the ecosystem come to, that Bitcoin's really exciting, but obviously it's just really the first native application of the blockchain. And this blockchain technology is the platform and is actually the real aha innovation. I'll digress for a second that I started my career 20 years ago in the late 90s as an internet analyst. And when I got hired by this little boutique research bank, they hired me to cover all of the internet, because there was just one analyst that covered the entire space. And so I had this massive, well, small universe, but it was growing exponentially. And fast forward, a year later, I had to, young little analyst, had to divvy up to everyone all these companies that were emerging. And, we had, an e-utilities and an e-government and an e-commerce and and there was an e-everything with these analysts kind of paralleling and overlaying the traditional analysts within a bank that covered these research sectors. And then a few years later, there's no e-analysts at all. This technology had gone from here to essentially mirroring the kind of non-internet world with the now e-world, and then the e gets dropped and everything kind of soaked back in. But you look back in hindsight and realize this internet emergence, which was the internet of information, came and affected every single vertical in our global economy and our global society. Every single part of it got changed. And so you kind of start myopic, and then you realize, whoa, it's gone everywhere, and everything has changed. But it's all, right now, you still have back down to these sectors and banks that cover things, but internet's just, you have to be aware of its impact and its role in it. And we've had this, at Blockchain Capital, this aha a few years ago when we started realizing blockchain, not Bitcoin, that this technology, this innovation, isn't just about, it was, blockchain really emerged as kind of the anti-bank. Let's take down or do the anti-bank post-2008 financial crisis. The irony that it's now being adopted by banks is thick. But this technology is now, in our view, and what we will really look for as venture capitalists, is out affecting all those other sectors again. So it's like I feel like I'm reliving my life again, where I started here, and next thing I know, I'm dealing with government services trying to adopt blockchain, and accounting services that have all these new products involved, and retailers understanding blockchain, and global trade affecting blockchain, and major companies in technology space understanding. And it's one of those technologies that, in our view, is going to be pervasive in every sector of society, but it's going to fold back in and be a part of everything we do. It's just going to add efficiency. It's going to save time and money. And so from our perspective, this isn't just a sector or a vertical. It's not the internet of information. It's the internet of value. In the last 20 years, look around you in Silicon Valley. All this wealth that's been created has been the internet of information. Has really had a huge, huge boom. And we think there's a major second wave coming throughout all of technology and society and government and the economy, and then it's the internet of value. And that is a tremendous concept, and we're in the early innings, and it's just kind of breaking outside of financial services right now and entering all other spaces. You could go down the list, and you did a great job at the beginning kind of talking about a handful of verticals that it's touching. To go to your second question of what sector I kind of get really excited about.
One application, something that.
Yeah. It kind of
like
goes
you just said that this title insurance pisses you off.
Yeah. So this is my other pet peeve is lawyers. Hopefully, no offense in the room. Quick raise of hands. Anyone in the room that's written one line of code in their life? Raise your hand. Anyone
Two
who's
lines? No.
Anyone that's a lawyer? Raise your hand. Any crossovers that you raised your hand both times? Okay, we got about 2 in the room. I will posit that 5, 10 years from now, it would be every single lawyer in the room has written code. And that the lawyers in the legal system of our future will be coders, engineers, computer scientists. They will be writing on Ethereum or Hyperledger. They will be doing smart contracts that will self-execute. They will self-escrow. They will be reusable by the good ones. They will entirely change the landscape of the legal industry. I think the legal industry will contract by 90%, and that there will be
All right.
And there will be new law firms that are entirely people that are creating smart contracts that will totally change how all business is done and relationships are done in our world and our society.
Fantastic. Yes.
I'll just say, there's a guy works with our Watson ecosystem, a guy named Paul Lippy, as some of you may know him, and I was really interested in this notion. He's got a whole company, like 80 people, that classify, I think mainly Dodd-Frank business-to-business contracts, or making sure that there's nothing in the contract is missing, or that could cause a problem with Dodd-Frank in particular. So I'm is working with Watson, and what if Watson could classify those things by reading it? That's all cool, but it struck me in particular that you could classify those legal documents, run classifiers on them, and then those classifiers, it turns out, there are about 200 overlapping patterns of effectively smart contracts, and you could just instrument all of that stuff on with blockchain and cognitive, you could nail the whole thing.
All right. Okay, so I want to do the following now. I think in your brochure, the front of it, there is a phone number, 650-308-8522.
That's my home phone number.
All right. So if you text it, it will go to his home, as well as it will come over here. And so we won't do what he will do with your questions, but what we plan to do with your questions is that we are going to pipe them over to me here. And so in that way, you can ask your question without having to bother to raise your hand and things like that. So again, the number is 650-308-8522. So please use that to text. While I have a question for our panel while we wait for your questions. So one of the questions I have is that, is this going to be a duel between the large companies taking over the blockchain, or the small companies? The innovation is going to come from a bunch of small companies, or hundreds of small companies, or a few large companies. So I'd like to get a perspective from people who are running small companies and people who are running big companies. What is your perspective?
Well, I've done both, and I think the internet did both. The blockchain will do both, right? I mean, I don't. There are lots of companies that don't exist anymore that were big companies at the beginning of the internet, but there are a lot that were there and that benefited. You got big companies like Walmart; they're pretty good on the internet. So I don't see that this is any different. Should it be?
Any other?
I mean, there's certain big companies that go away. I think Western Union has some issues ahead of them. I mean,
They're still around.
Well, they're gonna. I mean, that's a long-standing company that's extremely profitable. That takes 5 to 10% for someone to go send their mom in the Philippines money. I mean, you know those people, and they just kind of are a toll taker in the middle. I think those intermediary toll takers have a lot of problems ahead of them, and there's some giants out there like Western Union that they better evolve quick, or I think their sweet spot's going to go away fast.
No, but I meant to ask the question in the sense that, do we expect a lot of the innovation happen in large companies, and small companies will kind of help it out, or you see that happening? Maybe Zaki, you maybe like to. What is your perspective on that?
I guess the perspective that I see is more like a perspective that's sort of a clash between traditional and non-traditional organizational structures. So whether it's a small company or a big company, I find that our products are very similar, and we have similar customers, and we're selling a similar vision, and we're going to find niches in the ecosystem where our little companies and the big companies are able to coexist with each other. And then there's these weird things, like sitting right next to us in our office space is a company called String, and they want to have they want to create an entirely decentralized, unregulatable sort of parallel securities industry out of decentralized ledger technology. You have one of my friends has a company called Arcade City that is trying to do decentralized Uber, and that stuff is weird. It's weird. It's probably early in my estimation, because all of this technology is really a pain in the ass to program. It's really hard to build customer experiences with. So I think what the conflict is not big companies, small companies. There's companies like Skuchain, which is basically going to be selling similar customers, and we're going to find a way to what IBM is selling and John is selling. And then there are lots of people in our ecosystems that are prototyping these ideas that look crazy. But if one of them works, it'll be a way weirder thing than a startup succeeding.
Let me ask you a different way. Do you see a vision of a unified blockchain where we all have one blockchain, or there are going to be whole different variations? For this industry, we have this blockchain. For this industry, we have this blockchain. Any perspective you have? What do you see?
Yeah, I mean, it's any parallel that I try and draw in my mind, I end up coming away with the impression that there's going to be multiple. There's multiple protocols that run the internet. There's multiple massive companies that run the internet. The underlying fundamental properties of these blockchains can be rather different. So I would expect that they would be good at different things at the end of the day.
I see.
Yeah, I did
John?
my master's thesis on network topologies and the ITU back when the ITU was something. Well, it's still something. But if you look at the way networks grow, I think you wind up with this viral pattern, right? You start it's Pocky. In 19, I'm going to forget my dates, but in 19 something, let's call it 1914. Before Theodore Vail unified the Bell system, there were thousands of Bell companies, network companies out there. So I think you see a massive proliferation, whether they're on protocol A or B. Now, that's what we're trying to do with Hyperledger. I mean, the high-stakes game here is you don't need 17 different layer 7s, right? You need one, and we will all suffer if we don't have one, right? And it has to be constrained, and it can't get into the competitive areas, like consensus algorithms should be completely out of that. It should be the baseline stuff, but you want one so that we can get onto the work of the interesting stuff above it quickly. So I think there's one of those, I hope. We all should hope. But above that, there's going to be a lot, and just the business networks. I mean, whether they're on Hyperledger or something else, or things that are on top of Hyperledger, the business networks themselves, there's going to be the Raleigh or North Carolina, South Carolina tire provenance manufacturing blockchain, and then there's going to be, but at the same time, unbeknownst to them, there's going to be this Detroit thing going on with my uncle who supplies the auto manufacturing business, and Ford and GM and those guys. And at some point, they're going to run into each other, and they better be able to interop. They better be able to merge.
Right. Okay. Let me switch the questions around and take to Brad. Brad, you're a VC, invest in blockchain companies today. First of all, give us a perspective of why we see a lot of banks investing in some of these companies, but some of the VCs have not stepped forward. And in some cases, when VCs have stepped forward, so what is your perspective? When do you think that is going to happen? And your own particular approach, some might say it's sort of a shotgun approach as opposed to, so maybe I would like to ask both the questions.
Sure.
Overall VCs funding of blockchain companies and your own personal approach.
So most venture capitalists in the world, most VC firms probably have one, at least, Bitcoin or blockchain investment within their portfolio. Some of the more blockchain positive firms maybe have 4 to 5. We have 43. We were the very first Bitcoin-focused fund, blockchain-focused fund. We even took capital calls in Bitcoin for a while. So we've decided this is an extremely exciting sector that is going to be big, and I don't want to get the sector right and the company wrong. So if you think you're right on the big picture, I want to be the ETF on blockchain. I want to make sure that we've reviewed 700 business plans in the ecosystem and invested in 43 companies, hopefully cherry picking the best of them, and we'll have a lot of failures, but I want to make sure that we're not missing. In the early days of the internet, let's assume it's like 1995-ish, I don't want to miss the E-Trades, the Yahoos, the Googles, the eBays, because I, ended up with eToys or something equivalent. So that's Pets.com is the better example, yeah. So that's the reason for the shotgun approach, because we're that much drinking the Kool-Aid that this is that big of a sector. And I think VCs got blinded a lot of times because they saw Bitcoin and they're kind of scared of Bitcoin, and some of them jumped in because they needed some portfolio company to educate them and stay abreast of the technology. And I think they're all aware of the technology. I don't think all of them have entirely bit off that this is as big as I think the players maybe on the stage here or some of the people that are really in the ecosystem believe it is. I mean, there's not many venture capitalists funding any of the A rounds in the ecosystem at all. A lot of seed. but barely any A, and a bunch of B's and C's on the big guys. But even like the larger guys, you're referencing the banks, Digital Asset Holdings just raised $50 million, but
All from strategic.
yeah, we begged to get into that round. We called Blythe daily. We were trying to feed her up deals. We were doing anything we could, trying to friends of friends. Went through an associate of ours that knew her daughter. I mean, any way we could. And she would not take venture capital. She took it entirely from strategics.
Took our money.
Yeah, thanks. But I think it was actually smart. She got great advice in there. These are people that are invested in her, and she's invested in them, and they're going to become major clients. And I mean, it's probably better than taking venture capital. My whole job is to try and get a portfolio company clients. It's probably the best thing I can do is go land them a few banks. And she landed them without the venture capital. So she essentially skirted our primary role in there, outside giving capital.
There is a lot of strategics going on. I mean, it almost. Is that something that's? I mean, what's going on there? Why? I'm sorry.
No, I was going to say that. I mean, it may be. Is it? I was same question as yours. Maybe it's an isolated phenomena that Blythe is Blythe, right? I mean, there are no other Blythe.
But there's a few other portfolio companies that are doing similar rounds.
Same thing.
A few rounds that I don't know how privy I'm able to say that comparable equivalent companies doing very similar things that are about to announce major rounds that have also a ton of strategics involved. So I think the end users of these technologies, the banks that are going to find huge cost savings in their back offices and much more capital efficiency. So if they're going to do a major, bespoke derivative that's going to take 30 days to put together, and they have to go escrow off, $50 million to do this transaction, and they could do it much more efficiently and quickly in days instead of months, that's capital that's not sitting in escrow. That's capital they can lend out, whatever the fractional reserve ratio is, they can do it that many more times. So more efficient use of their own capital is huge to their bottom line. And in a low interest rate environment, they can't grow their revenue that much, but they can cut costs. So the banks are realizing this is a huge, huge boon to their bottom line and their EPS. And they realize that. I don't think the venture capitalists in the space are realizing as much. But I think it's because it's their P&L they're realizing.
I see. So, but do you think that the whole blockchain phenomena can be moved forward without the venture capital money? I mean, yes, strategics will put money into 2, 3, 4, 5 companies. We have not seen any phenomena where strategics will put money. We probably need 50, 60 companies, maybe 100 companies to be financed. That kind of capital probably does not exist in strategics. So what would it take to get these VCs
These are
move
Series
up there?
A where they're raising $50 million, which venture capitalists really wouldn't want to do because they don't have any pilots, they don't have any exposure. But with these banks, if they're going to build these massive, permission chains, in kind of like a consortium way, they're going to be potentially moving trillions of dollars around and huge, huge amounts of value that I don't know if they want to use the Bitcoin blockchain. They probably want their own permission thing among them. And the pilots, they'll put a few $1 million in a pilot, but it may take 5 to 15 years before they really convert over huge dollar values into a whole new construct paradigm. I mean, these banks don't change much. I mean, a lot of the technology that's underpinning them is 50 years old that your predecessors sold them. And so I don't know if that's the venture capital model to kind of have to wait that long, where the banks can wait because it's in their best interest to seed these companies and give them huge checks so they have the runway to get there. But it's different from the startups of the world. I mean, I think the bank is if you're targeting the banks, you need huge money to be able to last 10 years to be able to get implemented over time, compared to some of the kind of more creative.
Something's happening with strategics. I don't know what it is, and I haven't really thought a lot about it before this conversation, but you look at like Sentient is the largest or the most well-funded startup in cognitive or in machine learning, and what, 100 million, and it's from Tata and companies like that, right? And so, and it's not the venture groups, right? Like I'm funding stuff. I'm not a venture group.
That is true. We have noticed that also.
Watson Ecosystem is
product
funding
groups,
stuff. It's all. I'm the product guy, right?
Yeah.
So what if that's a trend? What if big companies are saying early stage product development is done in this way, and we create clouds of companies and then do stuff with them? I'm not saying that that's what we're doing as a strategic thing, but I'm just observing that with lots of companies. So maybe strategics is a thing now.
Yeah, so actually our experience in PeerNova has been the same. people who are approaching us for financing have been people who are inside these banks who are in product groups. So when we go through the innovation people or whatever, the venture people, in fact, so they are not, they're saying, okay, if you get money from the venture arm, who's going to take your product and implement it? I'm the direct user. So that is the reason that they are interested in that. So this is a new phenomenon, I don't think so. So we do have several questions from the audience. So the first question is, and any one of you can take it, is in 5 years' time, will you see blockchain technology having the biggest impact? If you have to pick one impact. One.
I'll make a quick comment.
Yeah, one.
It shifts a little more towards the Bitcoin world, but 7 billion people in the world, 1 billion of them have credit cards, debit cards, bank statements, they have financial infrastructure, and those other 6 billion of the people in the world are going to totally bypass these banks, much like Africa bypassed landlines and went straight to wireless, and they're going to have bank accounts. They all have smartphones. They just don't have any bank that gives a crap about them because they have $26 to their name, and they buy a piece of bread for 12 cents, and it's small money. It's not worth having a teller and a footprint and a vault and an ATM and all that sort of legacy infrastructure, like poles in the ground carrying wires to get your phone to occur. So I think those 6 billion people are going to be, that's the global financial inclusion is going to change our
biggest
world
impact
massively.
in 5 years.
5 years, that's maybe 10.
John, 5 years, big impact.
I'm going to pass.
All right.
I think it
come
sounds a
back to
little boring and mundane, but I think the way in which large financial industry players interact with enterprise customers is going to involve a lot of blockchain stuff. I think there's going to be a lot of crypto. I think there's going to be a lot of blockchain in sort of that interface point. Maybe between the banks is going to take them 5, 10, 15 years, but between banks and their enterprise customers, I think that there's a lot of sort of seductive properties to what we're building at Skuchain and what I see other companies building that may get some significant uptake.
David? One industry impacts.
Yeah, I mean, this is actually a little bit closer to Brad. I'd actually expect to see some sort of cryptocurrency breakout, which
I see.
Digital currency or cryptocurrency?
crypto.
But a global digital currency.
Yeah, I think you'll see some sort of breakout within 5 years somewhere in the world.
So if that was the case, let me ask you a counter question.
The technology exists now, and there's so many problems in the world, like it's so much optionality there.
So if that was the case, why did the mobile money didn't take off?
Well, in Africa it is.
Well, let's be careful. In Africa, it started in Kenya, right? In Kenya, 94% people actually use M-Pesa. I have a business in Kenya, so I know. But when you went to Uganda, the take-up is much smaller. When you go to Asia, it's actually not much in India, very little in Pakistan. Actually, Bangladesh with bKash is doing decent, but nothing like 90%. Not even 10%. Actually, they're 2.5% kind of stuff. So mobile money, isn't it kind of a digital money that should have been a precursor?
There's like $2.5 billion.
We didn't see any evidence of that.
2.5 billion people with smartphones now, and 5 billion in 2020. There's a lot of growth left there.
Something's going to happen here, but I will say that what I don't like the idea of is unknowability, right? So I'll say something fairly controversial. I've said it publicly before, so I don't mind getting in trouble again. The analogy that has been made by some pretty smart people. So I made sure to be sure that when I made this argument, we had done the math on it. But the argument is that, Bitcoin is the internet, and everything else that we're doing is just like those guys in '94 that were trying to create walled gardens out of IP, right? And we don't talk about them anymore. Well, I don't know. I don't think that's a very good analogy. The analogy I have to think is what else is unknowable? What else is permissionless? It's the dark web, right? So when I think about permissionless networks and things like that, I think of, it's not the internet, it's the dark web. The internet, from that calculus, is in fact a permissioned network. It has ICANN at the top of it. Now we can't, now this is an interesting problem and an opportunity for folks. Identity is going to be huge. Identity as your asset is going to be huger. And identity tied to boluses of information like your lab report, especially in a world of cognitive computing. I'll just give you an example. So identity, and first I'll say this. Identity can't be ICANN in the transaction web. That would be too much power in the hands of even a nonprofit, right? So we have to have a distributed identity system as well. It has to be almost reflexive of the blockchain itself, right? It has to be a blockchain. Otherwise, you have too much power in the identity system. And we do believe that governments aren't going to very happily just give up all of their control and forget about their fiat currency and their sovereignty. It's not going to happen.
That's
right. So identity is important, KYC is important, AML is important, and I think it's going to stay that way at least for like 7 or 8 months.
I got to echo that. I think identity based on blockchain is one of the most exciting, massive opportunities out there. Not only for the company that does it. I don't care if it's whoever
Companies,
does it.
It has to be plural.
Yeah.
It can't be one.
But there are so many business models and startups that come to us. They're pitching great ideas, like voting off the blockchain. That great idea solves all these problems, has all these great characteristics. But when you go down and really do the digging and whatnot, until you solve the identity problem, you can't do voting. And there are so many of these business models that you distill it down again. Okay, we're back to the identity problem again. The identity problem again. When that problem is solved, there's going to be a huge, huge fertile soil for amazing amounts of creative business models that never can exist until that problem is solved.
And when you solve it, you can do some pretty cool stuff. Like right now, we treat the medical industry, and with the Watson Group, we focus a lot on. We're becoming a medical company, right? Really seriously, we hire neurosurgeons and folks. We make computers out of neurology. It's crazy stuff. And so we're thinking a lot about data and how data is used in medicine. And so I get a lab report. I'm at Mayo Clinic. Just say, I'm making this up. And I get a lab report. Actually, the lab report's done by somebody else, not by Mayo. Now that lab report's a little bolus of data. Why don't I treat that kind of like a Bitcoin, right? Why is that? Right now, we think of mixing the data and stripping identity out of it. Once you've done that, I have no control over it anymore, right? If it goes from Mayo Clinic to MD Anderson to Sloan Kettering to some Watson computer somewhere that does some analytics on it, I am stripped out of that system. But what if I could say, just like a Bitcoin, just like a dollar bill, if I give it to you, I don't have it anymore, right? What if I can say, I'm going to create an asset out of it, and I'm going to have a multi-sig on it, and when you, Mayo, send it over to this analytics thing, I get to sign off on it. I can even write a rule that says, as long as it's between you and MD Anderson school, I'll just, I don't need to know every time. But if you send it to some other analyst thing or some other thing, every time it's used, and and then it has to come back by smart contract. It times out. It says it's got to come back. Okay. And when it comes back, it's no longer where it was. It's where I want it to be again. That's cool, and that means I can control my personal information as an asset.
Okay, go ahead.
I had before I got into cryptocurrencies, I was building biotech companies. And when biotech people hear that I do blockchain, this is the idea that they want.
So I have one last question. I ask everybody where the biggest impact could be. I think it's just my opinion, the biggest impact is going to be inside the banks. I think they have, this is just my opinion, that some of this technology can be used and actually will be used by some of the larger companies to help these banks overcome massive inefficiencies that they have. Because banking industry is in turmoil right now because their profitability is declining very sharply and they have to find other revenue schemes right now. And so one focus area for them is massive efficiency drive. And many of these technologies actually can be used because there's a whole bunch of reconciliation and other problems inside the bank, between different divisions and between banks and things like that. That's kind of okay. The last question I was going to ask is that if we have some entrepreneurs in the audience and they wanted each one of the panel members to give one piece of advice that you can do if you're starting a blockchain company, what piece of advice would that be? We'll start with Brad over on that side. Skip, what advice you have for people starting blockchain companies now?
If I wasn't investing money and I was going to go start a blockchain company, I would go to what I know, go to an industry I know, go and find out whether your father worked in this industry or your mom worked in this industry, something you know really well, and go and find out who was that low value add toll taker that was in the middle, that was just had a monopoly and was just milking money all day long, and it was kind of irreplaceable, but it was a necessary evil, and go blockchain them.
Have you copyrighted this? Go blockchain them?
No.
I
said it earlier about
I think
half
you
hour
should
ago.
copyright that. All right, John, what advice do you have?
I'm going to switch out. I'm most passionate and interested in smart government,
I see.
right? And I think that that's an opportunity.
Okay. Zaki?
I would say that, right now blockchain is very much about like enterprise sales cycles. And if you're really good at enterprise sales cycles, maybe blockchain is an exciting place to be. It's probably not the place to build the next great consumer business, except for maybe what Chronicled's doing.
Very good advice. For large banks and things like this, it's what it is. Yes. How about
And I would say just, this is a very common thing people say to other people who are starting companies, but just make sure you're solving an extremely acute pain point. Blockchain has amazing properties, and it may just be part of the solution you're putting together. It doesn't have to be everything, and for most great companies, it may just end up being a piece of enabling technology and not the entire solution.
Good. So because of the cell coverage issue, which has nothing to do with SRI and with VLab, we will not call it the last question. We'll open for a couple of more questions with your permission. Is that possible? We have time? Right? Just let's take 2 questions. How about you, sir, in red?
We can talk on a pretty high level about opportunities here. If I wanted to start using this tomorrow as a small company, where do I go? Where do I start? Where's the API? Repeat the question. What do I do now?
Okay,
So
so
the
the
question-
specific question is that he wants to start a company tomorrow based on blockchain technology. He wants to say, okay, how do I start? What do I do tomorrow?
Okay, I'm going to jump in right in there. Go
All
to
right.
ibm.com/blockchain. And you can, with one click, create start a blockchain network based on our submission to the Hyperledger protocol. Oh, yeah, totally. Yeah.
Blockchain
ibm.com/blockchain.
in a box.
There's my ad. I'm here all week.
Any,
I think that's actually, it's a very rapidly evolving space. It requires a lot of esoteric knowledge that people like me have accumulated over many years of just being passionate about this stuff. The reason I'm probably the scarcest resource in the blockchain startup space is people who have been living and breathing this stuff for years and actually can explain to you why this transaction structure is better than that transaction structure. How do you build a zero knowledge proof? And there's not a lot of us. And so
Using zero knowledge proofs.
all right, so let's take the second question. Why don't we take your question, the cell coverage question?
Let's imagine for a moment a world in which everything is blockchain. I don't know what it is, 10 years hence, 15 years hence, but what kind of underlying technologies need to be developed to make this happen, right? Is the network infrastructure as we have it today, is it good enough? Is it reliable enough? Is there enough bandwidth? Is it okay just to have a few backbones? What has to really change to enable this vision? If anything.
I'd say blockchain scalability is the super hard, super unanswered question of our whole industry. We gain we get about a 3 order of magnitude benefit from going from public open blockchains like Bitcoin to going to permissioned. But how do you go to higher transaction scales and more data and more compactness is there's going to be a lot of science done.
I think that's right.
I'll give you actual numbers for that. So with blockchain, you could probably go 100 transactions per second, something like that. A typical bank, a smallish bank, would do around 10,000 to 30,000 transactions per second.
The current stacks are about 1,000 transactions per second.
Well, that's solvable, but the 100-year architecture is what we're working on so hard right now in all sorts of companies, Intel, IBM. I think that the other thing, and this will complete a point that I kind of only half made earlier, It's, when we talk about the internet as this permissioned network, I like the idea of a permissioned network, right? Where, just like the internet, it's pretty easy to get an IP address or a DNS entry. It's pretty easy to get an Apache web server up and be part of the internet. But the question is, how can we all participate in consensus, in truth keeping, right? Which is more or less what's going on, right? And I like Intel's got a really cool approach to this that scales. And I mean, anybody you'll know very well, consensus algorithms like Paxos and PBFT don't scale easily. They got really big n-squared problems in them, right? So finding ways to get the benefits of to my way of thinking, not everybody thinks this. Some people think that it's okay to have like 10 companies in a little chain. I'm like, that's 6 companies that conclude against the other 4. I don't like that very much.
Right.
What I like is to be able to jack into whether it's a public network or a not public network, a permissive network. I like the idea of getting my truth solidified and made immutable by thousands of knowable organizations that are diverse.
But to answer the specific question, do you think some other enabling technologies is network, bandwidth? What is there needed, or we don't really need that?
I don't think this is
answer your question, I didn't
that's
think
not the salient problem.
Adoption and scalability.
Yeah.
So I think we should wrap it up, right? So
We're
anyway,
here all night. We'll hang out. No.
So I would like to actually thank all the panelists for their very nice comments.